All right, welcome everybody to the client support webinar for Wednesday, August 21st, 2024. This is our new time slot. We started this last week and we made, I guess, announcements previous weeks before that. So we're going to be doing it every Wednesday in the afternoon, which kind of, I think is a better time for everybody. And also too, for us day traders, it kind of lets us do our thing during the morning so we can get here in the later part of the afternoon. All right, so hope everybody's doing good, having a good summer out there, the whole 9 yards. All right, let me go through a few administrational items. One of the things I just want you to be aware of is you can ask me questions here. The only thing you need to do is locate the questions window on the webinar console. So if you would take a second and just locate that, that's how you can, basically ask me things and I will see them in there and respond appropriately. So don't forget, this is a webinar for you guys. What I usually do is have some material I'm going to talk about, but primarily questions come first, okay? So that's kind of important. And we're going to be here for about half an hour, okay? I try to make these not too long, but long enough to cover the material. All right, so with that said, let me just jump into the disclaimer. There's risks involved in trading the financial markets. I think we all know that by now. I always say without that risk, there is no opportunity. So the two really go hand in hand. We just want you to be aware of the fact that there are risks in trading. There's no guarantees. A lot of people come into trading and don't really realize that it is all about probabilities. And they may see somebody doing really well and think they can do that too, or something will work for a little while and the probabilities eventually catch up to normalize it. So you gotta just realize that that's the business we're in. You're not gonna win every trade. And so therefore you have to use risk control and protect your downside. We have a couple of books on that to help you, really hone that down. But we also have some great software like the risk to reward calculator and the trader's assistant that analyzes your trade so you can zero in on what's working and what's not. What else can I say about financial risk? Basically, trade with money you can afford to risk, called risk capital. Check with your financial advisor before acting on any information, not only from anything we may suggest, but anybody suggests out there, because they don't know your personal situation, okay, and your financial advisor should. In terms of risking your own capital, if you're into day trading and you want to work on that, a great thing I recommend is basically using one of the prop firms. I'll talk a little bit more about that. I'm not going to go into great detail on it, but I think it's a great way for you to get involved. They give you free data, basically small subscription fee, especially if you use one of the codes I've got. It doesn't cost you much money at all. And again, basically for me, for most people out there, the cost of the data would be more than the subscription fee. So I think it's kind of a home run. And you have also the option to get funded and then get payouts up to 90% of your intake, or your profit. So not a bad way to go if you're into the day trading and have the time for it. You can also trade at night, which is kind of cool. All right, I do a lot of my trading in the after hours market, actually the overseas markets. I'm busy sometimes, and I'll trade a little bit in the morning and then pick it up again maybe at 10 o'clock my time at night, trade for another couple of hours and call it a night. So there's enough activity in those overseas markets for you to actually do trading, day trading at night there. So pretty cool. Of course, that's not on the weekends, but on the weekdays. Apex Trader funding is what I would recommend on that. I'm just going to go ahead and put my information up there. If you're interested in it, you can click it. It will take you right to it. Just use our code because it gives you a discount, okay? But this is a great way to go. And again, I'm not going to spend a lot of time on it, but I do think it's a great way for traders to get involved in the markets in a safe way, so to speak. All right, so let me come out of here. All right, I think that's all I want to say here. So let me just bring this out and minimize that. One of the things I wanted to talk about today is price action. What does price action mean to you guys? Anybody out there? In fact, all of you. What does price action mean to you? And how does that come into play in making trading decisions? Let's just first start with price action. What is price action? Pretty easy definition, right? Okay, it's basically, David, correct, all right? So basically it's looking at price history on a chart and being able to determine trends, okay, and what else? Changes in trends, okay, possibly, yep. Yeah, and there's also a whole different set of tools that we can use when we look at price action. Now, obviously, you're going to be trading the right-hand side of the chart, but a lot of the price action can be leading up. For example, let's just take a look at this chart here. All right, basically, you got a big move up, a big trend here, right? All right, and then you have a move down. Well, this is based on the history, a very nice sloping chart. And so you've got a situation where when you see prices move that dramatically, especially after a move that was consolidated, and actually the consolidation was back here, because in Elliott Wave, what we do is we actually look at price structure, and we are actually forming an Elliott Wave count on that, right? So like something like a 1, 2, 3, 4. So that's basically looking at price action and using a form of technical analysis called the Elliott Wave. All right, what's another form you could use? Well, you could just draw a trend line, right? That's another basic form of looking at price structure when it breaks a trend line. So that's another one of them. What's some of the others that you guys like to use? And we're not talking about the indicators right here, okay? So, indicators, they take price action and they tell you something, but specifically if you just focused on price, just on price. In fact, what we can do here for fun, so let's bring this up and just get rid of all the indicators all, okay? Now, I do think, when you do something like this, you might want to change the price bars to, for example, something like a candlestick. Some people like that. I kind of like those too. But all right, so that's price action, okay? And a lot of people, including myself, all right, when we first started out, we did nothing but look at a chart like this without any indicators on it to become really proficient in seeing what's going on based on price action. So you obviously got a trend up here, even if you didn't know the Elliott Wave. And then obviously if you drew a trend line here, all right, when it broke the trend line, you know you've had a possible problem with the trend, right? Okay, so that may be an area to take profits based on price action. Now, another couple things to think about is you've often heard of me talk about the hook. Everybody know what the hook is? Okay, good. All right, so, all right, yeah, that's the one where I draw the little fish, right, the shark. All right, so basically what I'm looking for in a hook, all right, is I'm looking for a situation where the price corrects and maybe is making one last big move up, or here's a little bit of a correction too, all right, and then we had a sell-off, and then here's a failed one, okay, which is really part of the downtrend. So the hook really needs to make a higher high on that. All right, so like here's one that was close, but let's see if it actually made a higher high. So that was 682, and the high price there was 682, so it was a double top, and then it moved back down. So one of the things that in price action that we look for is basically this area up in here represents the high, and I'm just going to draw a line here. If we go up above this high again, then I'm going to actually look for something like one more thing up here, another high here, because basically that would be your hook, all right, and then another high. Now we may get the hook here, and it may go on up here. So if that's the case there, all right, then we look for the market to possibly move down after that hook. But what you kind of want to do is you kind of want in a hook, what you have when the market comes up, and think of about a hook, it's probably an Elliott wave 4 to some degree, but basically the price bar that clears the previous top, all right, this is another situation that if it even goes higher, a good potential short sell is one tick under that price bar that penetrated the previous high. And that signal has about an 80% success rate of capturing the next few price bars down under the entry. So it's not a bad tool to use, especially if you're day trading, all right, to look for those. And the higher the time frame, the more accurate the indicator is, but it can be used on all time frames. And we use it when we look at, like a 3 minute or a 5 minute and things like that. But you also want to have the return high to be, I think, within 10 or 20 price bars. Okay, so it's a very powerful signal, but that's basically price structure. And you don't need any indicator for that. But you have to become a master at identifying the hook, so to speak. Now, I think the hook also, I call it the hook, but I think also this pattern was recognized by another trader called Trader Vic. Everybody hear of Trader Vic out there? And basically, this was a pattern I think he talked about many patterns, but I think this may have been one a while back that he noticed when he did the stock markets. But we've noticed it works equally as well on the futures markets and on short time frames as well. So basically, one of the successes of this is you can't have a situation necessarily where you have one price bar and then it goes on for maybe 40 price bars before it turns up. That's not really the definition of it. You need to have it return up pretty quickly, like within 10 price bars. Now, sometimes you'll get a pullback like this, and I like to have a good couple price bars of pullback, and then another move up to where you can really see the hook. All right, you don't want to have, I don't really like this type of thing where it pulls back and then makes the high here. I mean, technically that could be considered a small hook or a higher high and put your sell under here. But that's one I have found that doesn't have a very good probability of success. I like to see a pullback, not too much of a pullback, but a small pullback of two to four price bars and then a move back up and creating a high above the previous high within 10 price bars. And that's usually a pretty powerful signal or place to put a sell. And then if it sells off or if it goes higher, let it go higher. All right. And then if it moves down, you keep your sell still here. You always keep your sell on the price bar that exceeded the previous high. And therefore the sell would be here. And it's usually pretty dramatic after that because this is a wave 4 of some degree, and this would be probably a wave 3. And so that's the end. That hook represents the final leg up on that swing trade up. Okay. So whether, this could be a 5th wave of a 3 or a 5th wave of a 1, doesn't really matter. But what you're looking at there is a top and then formulating your short trade on the price bar that penetrates that high. Ideally, what's really great is when you get something like this, you get the pullback and then you get one price bar here. And there's times when this be, if you're into candles, this will be a pin bar down. And then that's a really powerful signal because you're going in one tick under the price bar that exceeds the previous high. And it creates, especially if you have a long wick up here, that even cements the probabilities extremely high, that is a top of some form. So I just kind of like to share a little bit of this, and I think it's a fun thing for people to experiment with when they're looking at, will it work all the time? No, okay, but it works more often than not. You know, here's a little one here, okay, where it came up and then sold off a little bit. And if you're trying to capture just a few price bars of profit, for example, like on day trading, it's a nice little technique to add to your toolbox, okay? So that type of thing. Now, what's interesting here is if you get a high here, and then it gets a pullback here, a little pullback there, and you enter, and then it stops you out right away, well, then maybe that might not be a bad place to do actually a stop and reverse, because that basically is not resistance, this becomes new support, and you can take it on back up. But this is all price structure, and you can practice becoming really proficient, and it only takes a few good patterns for you to really hone down what kind of works and works well for you based on what you're trying to accomplish. So if you're a scalper and you're just trying to scalp a few points, then that technique may be pretty good, okay? If you are trying to catch more trend trading, then that can identify or help you when to get out of a trend that maybe you've been in for quite some time. So it all depends on your relationship and what you're trying to do with that. Any questions on that, or anybody have anything else they want to share on price structure? All right, good. Oh, good. I'm glad that was that. Yeah. All right. Yeah, I like it too. I'm just reading any questions here coming in. All right. Okay. So let me just reload the indicators here, and then we'll go ahead and get back and to our regular format here. All right. So any questions on any of the software and the platform you may be using the software on? Everything working all right for everybody? Don't forget any of the software updates we put in our VIP area, and that is located in the customer hub area. So you log in, that's the one where you log in, and then there's a forum area in there. All right, let's see. Yes, on the OWL indicator, what I try to do with the OWL indicator in terms of confirming art signals, which I think is what you're asking. So when I get a pyramid, for example, here, if the OWL is green, then that's a go, okay? I can take that signal. If the OWL is red, I kind of like to hold off until it turns green, the OWL that is, and then I'll determine if the entry is still good enough to get in. So I kind of like to make sure that OWL is green because it basically is dictating the momentum, and you want bullish momentum. So if a pyramid trading point is putting you long, especially early, the momentum may be close to shifting. I mean, you can see where it shifted from here to here, and the pyramid happened to form good in the green area. But if the pyramid, for some reason, formed down in this area here, then I would wait for this to turn green before I'd go in there, okay? Does that make sense? Let me know if that kind of answers your question. Yeah, on the PTF, you can go long or short on a yellow PTF, and you don't want to go short on a green one. So you don't want to trade against the PTF. And the PTF is right about 75% of the time. So 25% of the time it's wrong. And so when it shifts from a red to a green, then that basically is saying, all right, the previous forecast of more lows has now been replaced. And so now you need to change your your situation from bearish to bullish and trade in the direction of that. All right, another thing with price structure to look at, of course, is Fibonacci retracements. You know, Fibonacci retracements are giving us areas of profit-taking pullbacks. And then if we can see some type of jump off that bottom after it hits the target zone, then that is, you know, a home run as well. Okay, so that's kind of a cool thing. So, you know, in this case scenario, we came down with silver, came down into the target zone here and has bounced back. We have a green PTF and it's all looking good. So this is something, you know, you could consider. Now, the way I would do this, we still have a red owl here. I would wait for the pullback, okay, and see if the surge is strong enough yet here to give you another entry. So I don't think I would take this pyramid here, all right, because technically what we want to make sure is the downtrend's over. So a great price structure is off a move to the upside. Wait for a pullback, see if the bottom holds, and then look for another high at that particular point, okay, for a new trend. So this would be a little different than if you were looking, for example, for this top here, all right, for a sell-off. You might get a couple price bars, but the idea is now you're kind of in a trend up. So any top now could become support in an ongoing uptrend. So practice with those things because they're kind of fun. I think they can add a lot to your trading regardless of your trading style, but become proficient at price structure. I think it's really an important thing to work on. All right, let me see if there's anything else here. I think I got all the questions. So let me see. All right, well, I think we're done for today, okay? So I think it's a kind of an easy day today. It doesn't seem like anybody has any further questions, and I think I've answered the ones there, and we'll pick it up again next week. Again, this is a webinar where I thoroughly just want to make sure that if you're having any issues, we get them taken care of here each and every week. All right. Okay, well, let's wrap it up and we'll see you next week. Thanks so much for coming, everybody. Bye-bye.